Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it a key turning point because I think we're rapidly approaching that, and I'll talk about that in just a few minutes. But first of all, I just want to talk about and show the Dow versus the S&P and the Nasdaq on a weekly view side by side. We'll then do an update on the transportation index, which I talked about last week. It continued to worsen, over the last 5 days. And then we're going to take a look at the Nasdaq Composite, the Russell 2000, check in on the sentiment coming out of the option pits, and then check in on the long-term Treasury bonds and the 10-year yield and 30-year yield and the high-yield bond fund. The message that we're hearing there, continuing to be reinforced, is risk off. And then because of what's happening in the interest rate picture, we're going to take a look again as an update on XLK, the Semiconductor Index, the Philly Semiconductor Index, and SMH, which really they kind of mirror each other, but we'll take a look at both of those. Okay, let's start off here with the side-by-side picture, and I apologize, my voice today, fighting allergies, so I'm struggling through it a little bit today. We're down 97 on the Dow for the week, down 57 on the S&P 500, and down 550 points on the Nasdaq Composite. And this is a pretty bearish looking price action over here on the Nasdaq Composite. Look how not only did it engulf the previous body of the previous bar, the previous candle, it engulfed the body of the previous 2 weeks and almost closed below the entire trading of the last 2 weeks, very close to it. So pretty negative picture back down below the 10 week moving average. Not quite as severe here, and then the Dow is just kind of hanging back. I'm still a little bit puzzled by that, and I think the transports are leading the way. And speaking of which, let's take a look at that in terms of an update. When I talked last Saturday, here's where we were. We had 3 pretty strong moves 3 days in a row, Wednesday, Thursday, Friday, closing right here. Pretty dramatic move on Friday. The continuation we got this last week was just as dramatic in terms of the move. Now, when I talked a week ago, we were talking about how they were hitting the rail stocks and the trucking stocks. Well, this week they piled on into the airline stocks also. So pretty negative price action. I think this transports is leading the way down here for the Dow, and I'll be looking for it to catch up with the transports. I mean, clearly the transports has a tendency to lead. It topped out 2 months before the Dow did, back over here on this high in 1st of November. You know, the Dow topped out, I think it was January 5th, something like that. So one thing caught my eye this week was this email I got from, I follow Tracy Alloway and Joe Weisenthal on Odd Lots, Bloomberg Odd Lots. Well, Tracy started talking about what was going on with the transports, and she said here, nowadays people are laser focused on the cost of things vis-a-vis inflation, and they're actually focusing on the ability to source and move these things, which is why this whole thing about the transports, because there's been a recent dip in freight rates, and I think I mentioned that last time. Well, in addition to this, the graph that she showed here about shipping rates really caught my eye. This was the price of taking a container's worth of goods from the Far East to Northern Europe. Look how it is collapsed back down from being over $15,000 to about $11,500 or so, basically back to where it was early to mid-summer of last year. And, just talking about a round trip, and, that really got my attention when I saw that. Of course, we know what we're seeing here. We're seeing that the prices are reacting to a dip in freight rates. I haven't seen any kind of graphs about what the freight rates were, and I think that's why this got my attention here. So there is definitely something going on. And like she said, while there's still a big question mark over what's exactly going on with these freight and shipping rates, the fact that so many in the market are paying attention suggests that part of the shift from nominal to real is already happening. And I think she's right on. Okay, so let's take a look at the Nasdaq Composite. I want to switch over to that. Let's go to this is the weekly and daily view. So we just showed you the weekly. We just talked about that. So here's the daily view. Let's see, it was down 186 points on Friday. And, you know, the big move occurred on Wednesday to the downside. And here's the Elliott wave picture I've got. Let me just collapse. I move this, focus it in on the daily. I think we've had minor wave 1 down complete with the February 24th low. And now we completed a flat correction. It's what we call flat in Elliott wave terminology. And it's an irregular correction. Okay, A, B, C, and I believe 2 completed right up here at the high on March 29th. And now we are working our way down. And I like what I'm seeing in terms of the price action that happened last week, because when you get into a third wave, you should start to see gaps like this and rapid, very strong movement to the downside. So we'll look to see this is what we'll be looking for in terms of continuation and coming down and taking out these lows. You know, definitely the March low in here at 12,555. I believe that was lower than over here. Yeah. Okay. So that is the picture there on the NASDAQ. Let's take a look. We go back to the moving average view, and I'll take a look at the Russell 2000 ETF, IWM. And here's the weekly and the daily view. Let me zoom in on the weekly a little bit. So you could see the big move that happened here on the weekly. We closed, we were only down 159 on Friday, but 970 for the week. Pretty big move. Basically, this whole section in here, I had identified as a resistance type zone, because you can see how we had a high here, a high here. There have been a couple of key lows over here, and it kind of created this resistance zone that we punched up into on March 29th, but then got repulsed, I guess maybe is the right word, and, you know, sent back to the downside. And here we are on our way down, I believe. And looking at the Elliott wave picture, I think we have 1, 2, and here we are right at this this neckline. And I wouldn't be surprised to see it continue to break it. It tried to do it on Thursday, and then it closed below the trend line on Friday. So that's the picture I've got. I think we're heading south, and that's what I'm looking for in terms of 5 waves to the downside within the third minor wave. And the put to call ratio is kind of reinforcing this. So look at what's happening with the put to call ratio. So now we're at a 10-day moving average of 0.54. But we had these extreme readings at the end of March, the 29th and the 30th. Now I'm talking about bullish activity in terms of lack of put buying. So only 42 puts for every 100 calls for 2 days in a row. And when it gets into the upper 40s, I colored bright red, and then we have yellow in here in the low 50s. But this is very similar to what happened at the top in the first week of January, January 3rd. Okay, very similar. And so now we're getting it again right here, or we got it again at the end of March, 1st of April. And so let me just shrink this down. If I go back and take a look, well, here's the 1st of January. It's when we got that extreme. Here we got the extremes again here at the end of March. So, you know, 2 waves, wave 2s. Actually, I want to show you this. So, and it's the same thing on the Nasdaq Composite, right? Let's just go to the moving average view. Here's the 1st of January. That's when we were getting the extreme readings. That's when the Dow and the S&P were peaking out. And here we are getting it again. And so now we've turned down. So I think there's a high probability, no guarantees, I think there's a high probability that this is on the way down in a third wave, third minor wave to the downside. Okay, let's take a look at TLT and take a look at the interest rate picture and see what is happening there. Actually, first, before I go there, I want to go to high yield bond fund and just show you what's happening. On Friday, down 49 cents. Look at the dramatic move that's happened this last week. And when you look at the weekly chart, look how down $1.71. I mean, this is about ready to take out this low, which again, this is classic. This is the kind of thing that happened in the February-March sell-off that we had, where we were constantly getting these kind of bars. I'm talking about February-March of 2020, that big dramatic drop. We constantly got these kind of rallies where it looks like you're turning and you got a bullish type candle, and then next thing you know, they take out the low, and it's complete failure. And so here we are about to do the same doggone thing again, about to take out the low. And, it's just basically when you see this kind of price action in the high yield bond fund, it's basically saying risk off in the market. I mean, the traders, investors are basically backing off and walking away. Okay, so that is the picture there. Let's take a look at the long-term Treasury bonds, which we've been talking about. This is the moving average view. Let me just go to the Elliott wave picture. Here's the weekly view. I think we're working our way down. I think this is a leading diagonal pattern because of the major overlap we've been getting in the intermediate waves. And so what I've been watching for is completing the fifth wave down here, in a leading diagonal, just so you know. And a leading diagonal does not have to have all the 5 waves as a zigzag. Just 2 and 4 have to be a zigzag. Okay, in an ending diagonal, everything's got to be a zigzag. So right now, I'm looking for 5 ways to finish off. I just don't think we're quite there yet. Very close. We're getting close. We're working our way down in here. But then what does this correlate to? This correlates right back to the 10-year yield. Okay, so let me go to the moving average view. Here's where I've got the diagrams. And here's the daily. We're sitting at 2.71%. Here's the long-term weekly view, and I know I've shown this before. Here's the picture. Here's the long-term trend line. This is why I'm saying I called this video Key Turning Point, because I think we are rapidly approaching this key turning point right here at about 2.81% on the 10-year yield. Are we going to get repelled back away from this? We're kind of approaching this long-term trend line from quite a distance away. And sometimes when you do that, it's like you're running out of momentum. It's going to be interesting to see, does it basically go for a rest and pull back, maybe back to this zone in here? This was a resistance zone that then became support as we pulled back into it, and then boom, we've bounced out of it. Or do we burst through this trend line and continue to force the Fed's hand? The market continues to force the Fed's hand and says, no, Mr. Fed, you have to raise interest rates because we're taking it higher whether you like it or not. It's going to be really interesting to see. I do think we're at a key turning point, and this has implications for a whole lot of things, evaluations in the marketplace, evaluations on tech stocks, etc. So it's going to be really interesting to see how this plays out. And it doesn't matter whether you look at this 10-year yield or take a look at the 30-year yield, we have a similar type thing, except the 30-year yield is even longer in terms of all the way. What I'm showing you is a weekly view back to 1981. And we are not quite as close as on the 10-year yield, but yeah, we're approaching it. So let's take a look at XLK and the XLK and the SOX and just see how they're acting in here, given what's happening with the interest rates. Okay, so XLK was down $6.05 here this last week. Pretty big move to the downside, very much like, mirroring, I guess they're kind of basically in sync with the Nasdaq Composite. Although I think this actually closed below the 2-week. The low here, 152.46. We closed 152.41. So yes, we did close below the trading of the previous 2 weeks. And then we would go take a look at the SOX index, a similar type picture, but this is pretty negative. This is the lowest close on the SOX index since back over here at 426.75 on the week of July 11th, 2021. So almost a year, or approaching anyway. So pretty dramatic move here by the SOX. And it doesn't matter whether you're looking at the SOX or looking at the semis. Let me pull up the semis right here. It is the same picture. Very dramatic 2-week move down to the downside on the SMH, closing at down 1857 for the week. So a pretty negative picture. When you look at all the semiconductor stocks, my gosh, almost all of them, some of them are worse than this, some of them not quite as bad, but they're all doing some shape or form of this kind of move. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on that next video.